Right now, as we analyze the live tape on this volatile Tuesday, November 25th, 2025, BigBear.ai Holdings Inc., ticker symbol BBAI, is trading at exactly $6.04. We are witnessing a sharp intraday pullback, currently down 22 cents, which translates to a decline of 3.59% on the session. The stock opened higher but quickly succumbed to selling pressure, testing the psychological support at $6. If you are watching the Level 2 quotes, you can see a heavy block of sell orders sitting at 6.10, capping any immediate rally, while the bid side at 6 flat is fighting to hold the line. To the uninitiated observer, this sea of red ink looks like a breakdown. It looks like the market is voting no on the company's future. The expectation here, the lazy narrative that is currently dominating the message boards and the retail sentiment gauges, is that BigBear.ai is a broken growth story. The skeptics are looking at the Q3 earnings headline, which showed revenue down 20% year-over-year to $33 million. They see a company that promised hypergrowth in the AI sector but is shrinking its top line. They argue that the AI hype cycle has moved on to the megacaps, leaving small players like BigBear behind to starve. The expectation is that this is a consulting shop masquerading as a tech platform, forever dependent on lumpy, unpredictable government contracts that get delayed every time Congress fights over a budget. They see the 3% drop today as confirmation that the stock is heading back to the penny stock regulated wasteland of $2 or $3. But the reality? The reality is that this price action is a massive bear trap obscuring one of the most significant strategic pivots in the defense industrial base. While the algorithm-driven traders are selling the revenue miss, the smart money is actively pricing in the acquisition of Ask Sage. This is not just another tuck-in deal, it is the missing link that connects the massive large language model capabilities of Silicon Valley to the highly classified secure environments of the Pentagon. The reality is that BigBear.ai has just bought the only keys that allow a general in a SCIF, sensitive compartmented information facility, to use generative AI without leaking state secrets to China. The market is treating BBAI like a shrinking IT contractor, but the fundamentals suggest it is transforming into a high-margin, recurring revenue SaaS platform for national security. Let's dissect the Ask Sage deal, because this is the core of the divergence between price and value. For the last 2 years, every government agency has wanted to use tools like ChatGPT or Claude, but they can't. They cannot type classified troop movements or supply chain vulnerabilities into a public model because that data becomes training fodder for the model owner. It's a massive security breach. This created a bottleneck where the government was locked out of the AI revolution. Ask Sage solves this. It acts as a secure, agnostic wrapper or compliance layer that sits between the user and the models. It strips out sensitive data, anonymizes the query, sends it to the best model, whether that is GPT-5, Llama, or Claude, gets the answer, and recontextualizes it for the user. BigBear.ai didn't just buy a company, they bought the infrastructure for government GPT. Now, look at the financials again with this lens. Yes, revenue was down. But why? Because they are intentionally shedding low-margin, bodies-and-seats consulting work to focus on high-margin software licenses. This is a classic J-curve transition. You take a hit on revenue today to build a scalable software business for tomorrow. And look at the bottom line. For the first time, we saw a positive net income figure in Q3, roughly $2.5 million. The bears will scream, that's just a non-cash derivative revaluation of the warrants. And technically they're right. But that revaluation matters. It cleans up the balance sheet. It signals that the toxic financing structures of the past are being neutralized. Moreover, the company is sitting on a record cash and liquidity position, reported around $715 million in total liquidity capacity. This is a fortress balance sheet for a small-cap company. They have the dry powder to survive the cash burn phase and execute this integration without diluting you into oblivion. Let's talk about the Pangiam integration, because this is the Vision AI component that complements the text AI of Ask Sage. Remember, BigBear acquired Pangiam to dominate digital identity. This technology is currently running at major airports, scanning faces and biometrics to speed up travel. But the application goes far beyond avoiding the TSA line. In a world of drone warfare, look at what is happening in conflict zones in 2025. The ability to identify a threat from a video feed in real time is the difference between life and death. BigBear's Vision AI can process satellite imagery, drone feeds, and CCTV footage to flag anomalies. By combining Pangiam's vision with Ask Sage's reasoning, BigBear is building a multimodal brain for the military. The expectation is that these are separate, disjointed business units. The reality is that they are converging into a single operating system for situational awareness. When we look at investing sites or analyze the chatter on Robinhood stock trading forums, there is a distinct lack of understanding regarding the authority to operate, ATO. In the government world, you can't just sell software. You need an ATO. It takes years to get. It costs millions. Ask Sage already has these accreditations. BigBear has them. This is the moat. A startup from San Francisco can't just walk into the Department of Defense and sell their AI. They will be blocked by security protocols. BigBear is already inside the firewall. They are the trusted insider. This status is incredibly sticky. Once the government installs your platform into their workflow, they almost never rip it out. It becomes critical infrastructure. I want to pause here and ask you guys to engage with this idea. Comment below. Do you think the government should be using private AI models for national security, or should they build their own from scratch? I'm curious if you trust a private company like BigBear with that kind of responsibility. Let's pivot to the technical analysis of the chart, because today's drop to 604 is technically significant. We are currently testing the support provided by the 200-day simple moving average, which sits right around the 540 to 580 zone, depending on your time frame. This is the line of defense for the bulls. If we break below $6 decisively, we could see a flush down to 550. However, look at the volume profile. There is a massive shelf of volume at this level. This means a lot of shares have changed hands here in the past 6 months. These holders are now the base. They are unlikely to sell at a loss because they understand the long-term thesis. Furthermore, the short interest is hovering around 18%. This is a very crowded trade for the bears. They are betting on the company running out of cash or the government cutting spending. But if BigBear announces a single major contract win, say a $50 million deal with the Air Force using the new Ask Sage capabilities, those shorts are trapped. With 18% of the float sold short, a cover squeeze could send this stock to $8 or $9 in a matter of days. We saw a glimpse of this volatility last month. Today's red candle might just be the spring loading for that next leg up. We also need to discuss the commercial side of the business. While government is the bread and butter, BigBear is aggressively expanding into the commercial sector, particularly in supply chain and logistics. The same predictive analytics that tell the Army where to move tanks can tell a global shipping company where to move containers. The Ask Sage acquisition helps here too, allowing corporate clients to query their own complex supply chain data using natural language. Where is my shipment? What happens if the port of Rotterdam closes? The system answers these questions instantly. This diversification reduces the risk of being a pure-play government contractor. If you are using Fidelity Investments or Fidelity ETFs to look for exposure to AI, you are likely holding Nvidia or Microsoft. Those are the arms dealers. BigBear is the soldier on the front line using the arms. The valuation discrepancy is massive. Nvidia stock trades at 30 or 40 times sales. BigBear trades at a fraction of that multiple. The market is pricing in failure. If BigBear achieves even moderate success, the re-rating would be violent. You are buying a call option on the adoption of AI by the largest employer in the world, the U.S. federal government. Let's look at the institutional flows. We have seen recent filings indicating that major asset managers like Vanguard and BlackRock have increased their positions. They aren't day trading, they are accumulating. When the largest asset managers in the world start buying a small-cap stock that is down on the day, you should pay attention. They are looking at the 2026 and 2027 fiscal budgets. They know that the AI executive order mandates agencies to adopt this technology. The funding is legislated. It has to be spent. Big Bear is positioned to catch that bucket of money. There is a geopolitical angle that cannot be ignored: the China threat. The U.S. government is terrified of falling behind China in AI. This fear is the biggest tailwind for Big Bear. Congress will throw money at this problem. They will bypass the usual red tape to get